And next we have Tom Hough, President and CEO of Carrollton Bank. And do you need the clicker?
I do not.
Okay, great.
I'm going to stay right here. Thank you, Beth.
Thank you.
I have a couple of comments for each of my colleagues, but I want to say that all your work was very well done. I might be a little provocative myself, hopefully not too cynical, but I am the community bank discussant person here, so I'll say a few things about each, and then I want to talk about a little bit about something else. The CEO succession and performance at rural banks. My notes here, one would be, is the CAMELS rating an effective way to assess management expertise? Is that more of a regulatory type of a management assessment versus a performance assessment? What about bank performance over several years as another way to perhaps assess bank management? Stress testing community banks. As we all know, all banks, large and small, have undergone what I call a real-life stress test not too many years ago. So that's real case. And we all know how banks fared, either good or bad, but let's not discount what happened in real life. And secondly, I think if I ask some of my community banker colleagues, with regard to stress testing community banks, I think it's a great tool we're talking about here, because community banks don't have, in many cases, the resources to try to put in place their own community stress test regime. But on the other hand, many community bankers may be concerned about trickle-down regulation. When the stress test first came out for the larger banks, I know I've heard some of my community bank colleagues, well, don't worry, in a couple of years it'll be down to us too. And more regulation, more detail, more cost, et cetera. There is that concern out there among some community bankers, I think. Regarding home bias credit allocations, I think the conclusions make, at least from my view, intuitive sense for those small community banks that are primarily headquartered in one market, one county. It makes intuitive sense that the CEO and management would favor and have better knowledge of that market than maybe surrounding counties. But I think we might be assigning a lot of power and influence to the CEO position here. There are other stakeholders and centers of influence in a commercial bank. Obviously, other members of senior management, the board of directors, stakeholders including shareholders, the competitive environment of customers, and obviously regulators. So obviously CEOs don't operate in a vacuum and don't have total influence over overall decision-making opportunities. And regarding technology, yes, as we've all been talking about the last day and a half here, it's a huge issue for all community banks. I think many community banks are still exploring what's the right way for my bank to approach this. And Beth, I think you're right. As in most all cases, it's not one size fits all. It's nuanced based on what kind of community bank we're talking about, what is their strategic focus, what size they are, what markets they're in. It just depends. But I think it's obvious that community banks cannot match large banks' spending on technology. So I think there is some sense of community banks maybe playing defense versus offense on this issue, and perhaps at best being a fast follower to our larger bank competitors versus trying to be a leader. The financial constraints of that seem to maybe in many cases prohibit that. But no doubt, I know in my bank, technology is front and center, and our biggest issue right now going forward from the CEO on down. With many community bankers, I think that often rely on their core provider. There's frustration there. There's four major core providers that dominate the community banking scene. One in particular has 37% of the market. And these are old fintech companies. These have been around for 25, 30 years. They're big companies. you know, they're the opposite of the new fintech companies that are small, agile, and ready to go. These are older, larger, very large fintech companies, if you will, the first generation of them, that it's hard for them to turn that ship around sometimes and react to all this. They're trying, but I think a lot of community bankers are frustrated with the lack of speed that the core providers are moving. And so a lot of community banks, including mine, have pursued fintech collaborations where we have to move faster, we have a specific need, and we are embracing working with fintech companies, new fintech companies. In my remaining time here, I'd like to talk just a bit about Carrollton Bank, and maybe in doing so, give you a little bit of insight into how one community bank looks at things. And this will touch on several of the issues I think maybe that have been talked about in this conference in the last 24 hours. As was mentioned, Carrollton Bank is a fifth iteration company. Founding partner was my great-great-grandfather in 1877 in Carrollton, Illinois, my hometown where I grew up, which is located 50 miles due north of here in Illinois. A really good small town, 2,700 people, ag community. From the very beginning, 141 years ago, we've been a state-chartered Illinois bank. Day one, still remains so, even though we operate now in 2 states, in Illinois and Missouri. My dad joined the bank. He was in World War II for 4 years, and joined the bank right after that. And then he was the 6th employee of the bank. I joined the bank after college in the 70s. I was the 7th employee of the bank. And that time, the assets were $7 million, and I was the 7th employee. And it was a well-run, good community bank in a good town. Then we get to the early 1980s. Obviously, we remember the major recession back then, the response to the inflationary issues with the double-digit interest rates. And of course, at that time, in those early 1980 years, prime rate was 21.5% at one point, as we remember. That also fueled in our market and in a lot of ag markets the ag crisis, which was devastating for many farmers. And that, of course, was our major business at the bank. It's still our major business with our bank in Carrollton. It remains there, of course. We're headquartered still in Carrollton, Illinois. But in that time frame, that was 80% of our loan book were ag loans to farmers in Greene County, Illinois. So we lacked diversification in our assets. And so when my 3 largest farm customers declared bankruptcy in the same year, that was still tough. And we're sitting there in the mid-'80s with, I remember now, $66 million of deposits, $22 million of loans, and there's no loan demand because all the farmers are not able or wanting to expand and borrow at that point, of course. So my dad and I had a little talk, and what's our future going to be? So my mindset was, it's got to be about scale. We looked at the situation and said, for us to have the financial resources to be able to attract and retain really good people, to have the resources to cover our compliance costs, and I wasn't really thinking at that time about technology, but of course that's another major investment banks are making these days. We have to get to a bigger scale, or our future maybe doesn't look so good. And of course, a 33% loan to deposit ratio, as my dad and I talked, doesn't pay too many bills sometimes. So we expanded our business organically within an hour's drive of the St. Louis metro market, and also an hour's drive in the other direction to the capital city of Illinois and Springfield. And to make a long story short, that's how we've expanded our business. And now we have 9 full-service branches, one production office in this market area, 60 miles around our headquarters in Carrollton, that touches St. Louis Metro and Springfield, and assets of $1.6 billion, all produced organically over this period of time. 8 of our 10 locations are in the St. Louis MSA now, so, but obviously still serve Carrollton and my hometown, which I have a great affinity for. My family and I lived in St. Louis for several years, but still get to Carrollton quite a bit, and that's still home. So that's the backdrop. As we went on and got to the early '90s, I thought, we didn't have enough, really, the financial resources to buy banks to grow. So we had to think about trying to do it organically with people. So I really think community banking is a business. Obviously, it's a banking business. We think of ourselves as a business that happens to be a bank. And we really think of community banking in our business particularly as a people business. Because all community banks, all banks in general, but really community banks especially, all sell the same stuff. We have deposits, we have loans. There's really little, if any, differentiation in our product suite. In my view, the differentiation is the people. And probably in any business, not just in banking, obviously people do make the difference. So we tried from, as we set out to try to expand our market area into these 2 larger population centers around Carrollton, to do so by making our company attractive for people to come to and to stay at for a long time. I always say that 90% of my job as CEO is to really locate, attract, and retain really good people. And if I can do that, I can probably say I've done my job. Because good people make good things happen in any business, including a community bank setting. So, that's what we strive to do. And one of the things my father did in 1952 was establish a 15% profit sharing plan for all full-time employees. And we have that today. We've done it for now 66 years in a row with that 15% profit sharing plan, which has made a real difference to a lot of our team members over the years with their and their family's financial security. We also started in the early '90s providing ownership opportunities to certain team members, senior and middle management team members, so a partnership type of arrangement is really what our bank is today. It's an owner-operated bank with 3/4 of our shareholders being bankers who serve the customers every day. So that ownership feel, that partnership feel is huge to attracting and retaining really good talent, but also to have that extra degree of care, to our customers, because in many cases you have the owners taking care of the customers. Then, another thought I had was as we get into the late '90s and the tech boom, the original tech boom, right? And the kind of the introduction of the internet, and people were saying, well, with the internet and the tech boom here, any intermediary, any middleman is superfluous. They're not needed anymore. They're out of business. And I said then, I will say now that if that's the case, I think a lot of community banks were not going to fare well. Relationships don't matter. There's going to be a problem there. But that didn't happen then. And I think as technology goes on, we embrace technology, but for the more complicated transactions, for the business owners that we deal with, I think they really do. They really do value a relationship with a trusted person that can make a decision for them. And maybe as things roll on, there's more technology, more easy, quick ways to do transactions. That relationship situation might even get more valuable in community banking. So I'm optimistic about that, and for our industry. I'll wrap up here in a minute. I just have one other thing to talk about, and those are Carrollton Bank's 2 main objectives. This is found in my business plan every year. One is to continue the careful and organic building of a strong, scalable, efficient community bank. That gives us the resources to take care of our customers properly, take care of our team members properly, and produce a fair return long-term for our shareholders. And the second objective is to preserve and protect what we call the Carrollton Bank Way. What is the Carrollton Bank Way? We say it's the simple, friendly, common sense way we collaborate with our customers and with each other. Why is it important? It's by far our biggest competitive advantage and differentiator in the marketplace. And so obviously we strive to have a scalable community bank, but also to preserve our culture and the Carrollton Bank Way, because that's what makes us, we feel, different as we move forward, especially with regard to our larger bank competitors. And with that, I'm out of time, so I need to shut up. Thank you very much.